Us now is Scott Painter, the founder and CEO of TrueCar.com. TrueCar provides pricing information to consumers and dealers and partners with AAA, American Express, and Bank America, among others. And Scott was a finalist for the Ernst & Young Entrepreneur of the Year Award. So last year, we like to always throw that in there, Scott. But, let's start where Adam finished off here on hybrids. It's interesting because it helped to drive the sales numbers, and hybrids are seemingly no longer just a very expensive sort of status symbol. You can actually save money by buying a hybrid.
Well, I think hybrid numbers are certainly encouraging, but I think if you look really at what's going on at GM, there's actually a bigger story there. GM has really taken notice of how the car market responds to a spike in gasoline prices. And largely, this is reflected in their stock price. They're doing well. They beat their numbers. Ford was a little bit ahead of this curve. They changed their product a little bit earlier. But to really sort of highlight the issue, almost 50% of General Motors sales were really due to an increase in small cars and fuel-efficient vehicles. And in fact, last year at this time, only 18% of GM's total mix was 30 mile per gallon or more vehicles, whereas right now it's about 31%. So GM has really come to the table and said, we understand what the American public is looking to drive, especially at a time when gasoline prices are starting to spike.
Scott, conversely for Ford, I mean, their numbers, they were up 13%, but that was less than what folks were expecting. Where are we when it comes to Ford?
So I think Ford is really a stable player here. I think that you've got a company that has largely gotten the message and has gotten it for quite some time now. And so they don't look like they're making some relative gains, but they already are, from a product point of view, selling a much higher percentage of small cars than they were in the past. They're looking to profitability on their small car fleet. And if you look across the board, all of the automakers right now are looking like they're surging. And certainly the supply constraints coming out of Japan have affected Toyota and Honda the most. And I think in general what it proves is that the car market really does react to the laws of the free market, supply and demand. And I think that one of the interesting numbers that we see at TrueCar is that vehicle prices are surging 3 to 5 to 7% across the board, and incentives are dropping to the lowest levels we've seen in almost 10 years, which is really a very healthy sign for the automakers.
Let's talk about Chrysler for a minute, because it's part of a huge and interesting fiat picture here. And also, of course, the bankruptcy. It shows how you can come back from that. They're selling more Dodge and Jeep vehicles. What's the story at Chrysler?
Well, I think Chrysler, again, is really another American car company that is benefiting from what's going on in the overall market. Right now, the fundamentals that really drive car sales, low interest rates and the availability of consumer credit, are very strong. We're at a 13.2 million car market here in the U.S., which is really about an 18% increase over about a year ago. So we are surging overall. So even when you look at the numbers, one of the things that's important to notice is that high mile per gallon vehicles are really driving the success. Chrysler is also coming to the party. They're probably the last of the big three that are really coming to the table here. But even such, you've got the low mile per gallon vehicles, the SUVs and the pickups. They are actually down on a ratable basis, even though if you look at the numbers, they look like they're up. And that's just because the overall market is surging.
Scott, got 30 seconds left for you. The big winner that you say is the maker of the Elantra and the Sonata. I mean, that's who's really winning at this point.
So there's no question. Hyundai has absolutely got everything to gain, nothing to lose. They're 50% larger this year than they were last year. It is the runaway success, and relative size matters here. Obviously, it's easier for a smaller car company to make a bigger gain over a larger car company on a percentage basis, but they are absolutely doing a great job. Their marketing campaign, and most of all, their product. Most of their product is 35 to 40 mile per gallon vehicles, and it's doing great in this market.
Got it. Scott, got to run. Thank you so much. Scott Painter, TrueCar.com founder and CEO.